Hi, everyone. Thanks for tuning in. Let me make sure that I have Deb as the presenter.
That's it, because I can't change my screen yet.
Okay.
Now.
Introduce myself. My name is Tiana. Hello, everyone. Thanks for tuning in to GovReports webinar. As you know, small employers are exempt from reporting amounts paid to closely held payees through the Single Touch Payroll until June in this financial year. However, from 1st of July, amount paid to closely held payees such as family members, directors, shareholders will need to be reported through STP. What are the changes? What to look for when reporting STP for these entities or payees? For today's sessions, we have the pleasure of having Deborah Thomson as our presenter, who will share with us how to report for closely held payees through GovReports and or the integrated software. And we might even get some tips on how to overcome some potential STP issues, especially now we are fast approaching the end of financial year. Before I hand over the control to Deb, to ensure that technology is working for everyone, can I get a raise of hands if you can hear me? Thanks, Sylvia, Sue, Mark. Okay, seems like most of you can hear me. This session is recorded. We will be posting the recording of it on the website, post this webinar on the webinars page. So if you miss a little bit here and there, you can always revisit the session at your convenience. During the session, if you have questions, please don't hesitate to send it through to us on the chat, on the questions panel. And we'll come back to it during the questions time or as we go along I'll answer it. Myself or Cindy will answer that during the session while Deborah is speaking or during the questions time. So over to you, Deb.
Well, thank you, Tiana. That's really great. I love the confidence, and I'm really looking forward to changing to STP 2, so this will be good. So just hello, everybody. I just wanted to mention, of course, that GovReports, you know, I think we're really lucky to have GovReports to be our input, our conduit to all the different things that we need to with the tax office and ASIC, and of course a lot of this information will be going to Services Australia and everything. So I think it's well done, GovReports. I'll just get that in first. So my plan of today hopefully is we're going to just talk about the end of year finalisation if you have been using Single Touch Payroll. We're going to have a look at the changes for seasonal and intermittent employers, micro employers and the closely held, and then we're going to have a look at the Single Touch Payroll Phase 2. So let's begin. Of course, the most important thing is when do we have to have this work done by? And as with the changes that we have to start on the 1st of July, of course we have to have our STP finished for 2020 financial year by the 14th of July. So there are extensions for different circumstances, but pretty much everybody is being restricted to that 14th of July. So we're going to have a lot more intense time, I think, with the end of payroll this year as far as reconciling going. And yeah, if you've got clients, for personally with me, I've got clients that are doing it fortnightly. I'm checking when their fortnight is so that, you know, I may even be able to start early. So with GovReports or with Single Touch Payroll, how are you going to use or what are you going to use? So GovReports has 3 great solutions. So you can use Single Touch Payroll through GovReports through your normal subscription. It's available. Or you're able to use the IM STP reporting module or the IM Business Ledger. The difference is that the STP reporting module is just really for payroll, but it does allow you to have pay slips and all of those necessary things for payroll. So it's great for a client. I've got a client at the moment who can't decide whether they're retiring or not. And it's just really great to be able to do that through Single Touch Payroll and keep all the compliance down, the costs down, as well as the time and difficulty. So to me, I just sort of feel like this one slide encapsulates it all. the final pay event is basically you have to tick a final event indicator. And that's, I mean, that's great. It's obviously you need to be doing your reconciliation so that you're happy with what those figures are. But it is as easy, so much easier than payment summaries. Now, you know, you may be still doing some payment summaries for other reasons, and that also is available in GovReports. But just being able to tick your employees once you've reconciled them, I think makes all of our lives quite a bit easier. So with GovReports, obviously we need to review our employees, we need to review our pay runs, make sure that we're, you know, happy with what figures we're seeing, to make sure that we haven't, you know, transposed anything or done anything that we disagree with, and that everything's in the areas that they need to be. And then we just add that finalisation tick, which of course is in that each pay run, so it's each employee. And then you need to roll over. Now, if you forget to tick the final event indicator in this situation, it's really great, because when you submit that first screen there that's got the red box around it and you forget to do that, you can go back to this screen at the bottom where all the employees are listed, and you can have all of the employees, tick those, and you'll see that you've got a final event indicator there as well. So it really does give you a bit of freedom that if, oh no, I'm not ready yet to tick it, but once you've gone through all of your employees and you're sure, you can go to that front screen and tick everybody and submit that final event. If you need to roll over, and the one of the things I sort of want to mention is that if you use IAM and GovReports, you do need to remember that sometimes the screens are in slightly different places. So you do need to sort of get ready, or, you know, used to it, because I sort of go, oh, now which one am I using? Where's the screen? So to roll over in GovReports, you need to obviously be in a client that uses STP and that has STP lodgements. But once you're in that client there, you will then go to where it says report email and those 3 lines. When you click on the 3 lines, you then get another screen, which down the bottom, it gives you the rollover. Again, you click on the rollover and you come up there and you're able to close the period. And again, this is interesting in comparison to IAM, because in IAM you are starting a financial year, whereas in the GovReports you're closing. So it is sometimes remembering, you know, which dates am I putting in, because, you know, am I closing the year or am I starting my next financial year? So this again is what IAM looks like, and I'm sure anyone who's using it is very used to this screen. And this is the main dashboard. So again, with the IAM, you need to be reviewing the employees, you need to be reviewing the pay runs, happy that you got all the reconciliations in place, and again, then it's a matter of a finalisation tick, that final event indicator. It also has on there, do you want to fill the succession date, and it does still give information about why they're leaving the company, and again, then you can roll over. With the STP in the IAM, of course, you are going to get more information. There is an income statement there that is available, and again you'll see that on this income statement it actually does give you that the final event indicator has been ticked. So if you needed to give it to the employees, it certainly is available on that last one. If you need to roll over the IAM, then again you go back to your dashboard, have a look at your top toolbar, and you'll see that the financial year you're in, that you're working with, is on that toolbar. And when you click on that, you have a list of all the years, all the payroll years that you have been working, and you see that you've got manage financial years. When you click on that manage financial years. You then get a list of all those financial years, which means this is very handy because you can in fact open a year. So if, for example, you do put the final event indicator on and then, you know, a week later discover that there was something that was untoward, you can come and open up the year again and fix that, and then you know, do a replacement event and refinalize it. And where you've got the little plus sign, if you click on the plus sign, you will then get the start a new financial year. So as I mentioned, in the IAM, you are starting a financial year, whereas in the GovReports, you're closing a financial year. And just as a little preview, because we will be talking about phase 2, this is the new screenshots for GovReports and IAM. So you'll see that the final indicator, of course, is still there, is still available in that same place. And again, it'll be just a matter of readjusting yourself to where you're looking on the screen. Tiana, is there anything there that you would like to add, or Sandeep, is there anything that you want to add to that?
No, we're good.
Yeah, good? Okay, all right.
No questions so far, so I think everyone's happy with that.
Okay, cool. So we're going to have a look at seasonal and intermittent employers. So seasonal and intermittent employers, of course, are the type of people that maybe only have a few people who are working normally, you know, 2 or 3 people, and then for an intense time during the year, they employ more. So you'll see that the ATO's definition is that they employ 5 to 19 short-term employees for up to 3 months or less, and then they're eligible for the concession. And that is putting in the quarterly reporting. Now, this quarterly reporting is staying, but they are actually lumping these seasonal and intermittent employers in under micro employers. 20 or more seasonal or short-term employees, obviously you need to be going to the ATO with an application, and they're going to look at that case by case. But the most important thing is there is criteria, and the criteria is that all the amounts owing to the ATO are either paid, or, you know, you've got a payment plan in place, and all your lodgements are up to date. So that's very important as far as the ATO giving you that concession. So applying for the concession, obviously a registered income tax agent or BAS agent can apply through online services. If businesses do it, then it's the businesses' STP deferrals and exemptions. The quarterly STP report is due when your BAS is due, when your activity statement is due if you do get that concession. And of course the finalisation is still the 14th of July, even though you do have that quarterly concession. So I think that's sort of an interesting mix at the end of the financial year. And one of the suggestions I saw on the ATO's website, of course, is that if you have employees that, you know, they've done their 3 months, whenever it is, that you can actually advise them that there's no requirement to report. And I guess that really just stops them harassing you or harassing the client to say, why haven't you sent information, you know, STP information on these people? It's just a notification. And I actually came up with a scenario of what also, if you're employing people for the 3 months, but it happens to be June to August, and they're going to be, you know, 1 month in 1 year and 2 months in the next year, but then maybe next June. So you're going to have these people on and off. And so that could make it easier when you do have these intermittent employees. So then we move to micro employers, which of course previously were 1 to 4 employees. It's just the intermittent were sort of the separate group. Now they're all going to be put together, and it is again from the 1st of July the quarterly reporting concession will change. They're really going to limit the amount of people that are going to have that quarterly concession. You absolutely have to have exceptional circumstances. And on the ATO's website, which is back in February, they said you can, apply for quarterly reporting with exceptional circumstances, but at the moment it's not being accepted. So you do need to keep an eye on that ATO page, so when you can, get in there and apply for those quarterly reporting if it's possible. And of course they, you need to be eligible again, so you need to be that micro employer. So 1 to 4 employees. You lodge your activity statements electronically through a registered tax or BAS agents. You have a non-computerised payroll. All amounts owing are, either subject to the payment plan or up to date. And an application for a period commencement, you must also meet all the guidelines. And the guidelines are very narrow. Natural disaster or other disasters, the records seems to be you've really, just not having a computer, I think, is not necessarily going to be considered an exceptional circumstance these days. That's not going to necessarily give you that quarterly. Serious illness or death, a considerable lack of knowledge and understanding of taxation obligations or system issues. And that's, like you're out in the middle of nowhere and it's very hard to get internet. But just sort of I don't have a computer isn't necessarily going to wash anymore. And of course the seasonal workers are still included now, but they are included under that micro exception rather than their own little category. So no or unreliable internet connection, this is their definition, an inability to connect to the internet, a connection that consistently requires multiple attempts to connect, consistent dropouts or disconnections, and exceedingly slow data transfer. And again, I don't know if they have, there's a number that goes with that, but it is, the ATO are definitely trying to restrict that concessional quarterly lodging. The due date for the lodgement will be the due date of your activity statement if you do get that quarterly lodgement, and again the finalisation is going to be the 14th of July, even though that it's the earlier date than the BAS is due. So it will mean that there's going to be some, there's going to have to be some heavy lifting, I guess, in that first 2 weeks after the 1st of July. Tiana, is there anything that you would like to add or questions?
Personally, I don't have any questions, and I think on the ground we don't have any questions at this stage, Deborah, so we'll leave it to the end.
Okay, all right, cool. Closely held, and of course they are related payees, and this is an area I think that personally I think is going to cause a bit of angst for people. It is, of course, that you are related to the entity. You're a family member of a family business, you're a director or a shareholders of the company, and you're beneficiaries of a trust. So it is going to affect a lot of companies that have not been in the Single Touch Payroll regime, even though perhaps they should have been in this last 12 months. So prior to the 1st of July, closely held hadn't been required to report via STP, but they will be from the 1st of July. And if you're in a smaller employer, you can report these amounts on or before. And it's the same requirements that for all STP, it is on or before the payday, or you can choose to report this information. So this is a quarterly. This is going to be one where I'm sure a lot of people and tax agents and BAS agents will take that opportunity to report quarterly. If you have other payees, sort of other normal employees, then they need to be reported like they should be being reported currently on or before each payday. And there are different arrangements for businesses with 20 or more payees, so they obviously need to be talking to the ATO about that. Small employers with only closely held payees. So if there's only, a director of the company and he's the only one that Payees, the only one that work in it, then they have until the due date of their closely held individual income tax return to make the finalisation declaration for a closely held. So that is one of the exceptions to the 14th of July, but obviously it is a, it is a small group, I believe. So the way that you are going to be reporting closely held payees is that you are actually going to, any money they actually take, then again, you're going to report those actual payments on or before the date of the payment. The other one is report actual payments quarterly. So again, you take all of the payments, all of the drawings, whatever it is that they're taking, and you report that quarterly with the appropriate PAYGW. The other one is a report a reasonable estimate quarterly, and I do believe perhaps that will be a favoured trend while we're all getting used to the system. And obviously to me it's something that it means BAS agents and income tax agents need to absolutely have communication going backwards and forwards. We have to talk to each other, and we have to get advice from the income tax agents if you're a BAS agent before you make any of these decisions on these closely held. It absolutely has to be, well, from my point of view, it has to be the tax agents directing that. So if you choose to report quarterly, the estimated quarterly, you need to make a reasonable estimate of the amounts you've paid, and you report that estimate through STP. The estimate's based on payments you've made to your closely held payees. Report and pay your PAYG withholding on your activity statement based on your estimate, and making superannuation contributions for your closely held payees based on your estimate. And again, that is perhaps an area that closely held people to their entities have not necessarily been making their superannuation contributions in that way. So determining a reasonable estimate is that you need to be looking at if you're taking last year's, and again, certainly for, it might be the most reasonable way to do it, for the especially for this first year, that you take last year's tax and you divide it into 4. You pay 25% each quarter, so that by the end of the quarter there is 100% reported. And I don't know whether there's any leeway or that, but that's my understanding is you're going to take whatever the income was, divide it by 4 and put it on the STP reporting each quarter. And this is what the new areas of GovReports and I am with the STP for closely held. And I think it's actually great because it really puts it out there for you, and it makes hopefully everyone aware that when they're looking at that it closely held needs to be on that STP reporting. And yeah, I think it's great to see that. I'm really happy about that. Tiana, anything that you would like to add?
We're good, Deborah, and I think we still don't have any questions from the floor, so I think you're covering it well. If anyone has questions, please don't hesitate to send the question through to on your panel. You've got the question panel.
We've got you to answer, and Sandeep. We're really fortunate to have you two here with me.
Certainly. Okay, so we just merge ahead.
Going. Okay, all right. So now we're going to talk about Single Touch Payroll Phase 2. And I don't know if you have been looking at it very much, and I have been thinking, oh goodness me, what does it mean? What does it mean for me to be having STP2? And it was announced in the budget. It was supposed to be in as of the 1st of July this year, but people have made I guess declarations to the tax department that they can't do it, and so that there is a mandatory start date of the 1st of January. And I think GovReports have been great, which I will get to. So I think we've got 6 months where we can take our time to onboard our clients up into Phase 2. So what isn't changing. So the things that aren't changing is the way you submit the report. It's going to be exactly the same as how you submit it now. It will be on or before payday, which is exactly the same as it is, you know, the requirement as it is now. And again, unless of course you've got those, you know, couple of concessions that are about. The types of payments are still the same. They're still in scope for STP reporting. Taxation and superannuation obligations and end-of-year finalisation requirements. None of that is changed. To the way I've been looking at it, and perhaps I haven't got a handle on it yet, but my understanding is basically areas, categories are expanding, and that's what we're going to need to be doing, is to take the information, and as where we perhaps grouped it in one way, we're now going to group it differently. This is because this information is now going to be shared to people like Services Australia, and hopefully the ultimate aim, I believe, is that some of the reporting that perhaps you make as a separate type of reporting will be taken care of in Single Touch Payroll. So for example, these two screens here, as I said, STP captures more information. So you'll see that the current version, if you're using a Single Touch Payroll, is how it is, and then the STP version 2 expands. So this area here, you'll see, has a lot more information than the current. And it's information that you probably already have about the employees, which I think is another great thing, is it's information that you probably have most of it. And so you need to just make sure you fill it in. And of course, the advantage using STP is that you can roll it over in GovReports, and so all of that information is there and you don't need to keep filling in that same information. Here is another screen. Again, this is a employee with their details, and you'll see the difference is where it previously it just had their tax file number, their super, their bank details. Now it's got a lot more detail in it. What type of category they are, what's their PAYG option, you know, Medicare levies, all of that information is extra information that we are going to be telling the ATO, and therefore then Services Australia and Fair Work and I guess eventually everybody that needs to know. But we won't really, once we've filled it in once, we won't be filling in lots of information each time. The ATO has created a form for you to be able to send to your clients. It is definitely downloadable off the ATO website so that it gives that explanation to your clients of what is expanding in Single Touch Payroll. And it is quite a few areas, but as I said, I believe you mostly have that information. But that will, to me, will be one of the things that you need to check and see that you do have that information from your employees. So with the new version available, again, if you go in to do your normal STP, what you will now find is there is going to be a new button where when it's available, so that you can click on new and upgrade everyone. The other, I think, great thing about that is it is going to be very soon, and so you're going to have that 6 months, and you can take a bit of time to get your clients on board. You don't have to, you know, do all of your clients at once. It's going to give you a chance to look at your client list and divide them up into the next 6 months and see when you're able to upgrade them. I will put in the warning that Tiana just mentioned to me before, that of course once you hit that new button and you do upgrade them, you can't take them backwards. And so it is worth to make sure that you are happy with them before you hit the new button. So you go into your normal selector form and you'll see your STP payroll events have new version. If you click on that new version, you then get a dialog box that warns you that you don't have to actually have it until the 1st of January, and so it waits to give you, you know, are you sure? so that you can confirm. And of course, once you do upgrade, that client is going to be upgraded for all of their employees. So when you go into this GovReports one, this is the new screen. This is the first screen that you see. And if you do, for me, I notice a lot of difference, however, a lot of similarity, so that I'm not going to be shocked by what I'm seeing. I actually, understand all of those, there's a few new things that I've got to learn, but basically I know what that screen is telling me because I have been using it. So this is the list from the ATO of what sorts of information is going to change. And you'll see it says additional information, and it, you may already have it. So you may already have it on a tax file declaration or Fair Work form or some other form you may have. So as I said, it's a matter of checking to see what new information you need and having it available to put into the software. Employment conditions, it's more about telling the ATO the detail of these. Income type and country code, disaggregation of gross. So previously, when we first got STP, we were making sure that, which of this goes into gross and which doesn't. And again, this is where we're going to break that out a bit more, and the ATO then are going to get more detail on what has been lumped into that gross payments. Salary sacrifice, lump sums, child support and garnishes, so that's the sort of thing that I was mentioning that it's going to be to Services Australia, and changing software. So those sorts of things are, I guess practical things from the ATO's point of view. So we're going to go through and have a look at those and the screens. So with the tax file declaration, our employees are still going to need to fill that out. What the difference will be is that you won't need to be lodging it. Now, I don't know whether, and again, Tiana or Sandeep might be able to tell me whether that comes in as soon as you turn over to phase 2, or whether that's going to be at some point when the ATO tells us. But basically, you still will need your employees or your client's employees to fill out their tax file declaration. The employers need to keep that and obviously fill that information into the software that they're using for STP, but they won't be having to send it in, which is great because, lots of our clients do forget to actually send that to the tax department. The next one is employment basis, and it's about, as I said, giving more choices than there previously was. And the tax treatment, are they casual, are they part-time? That was always in there, but there is some other choices now to be able to pick. And the tax treatment code, you'll see that GovReports will actually, from what other two choices, the category and the option that you pick, GovReports will automatically put that tax treatment in. As you can see, it's a greyed out area, so it's not one that we need to pick. And you'll see the difference. So with all of these, we've got the GR for in the GovReports, your GovReports subscription, and the IM is for the separate IM STP reporting and the IM business. Tax treatments, so that is changing, and again, it is the ATO has picked it. I'm slightly amused in the fact that, what sort of category of employee, are they regular or are they actors? I didn't know that needed to be separated out. And horticulturists and shearers have been separated out, but no other industry. But pensioners, working holiday makers, seasonal worker program, foreign resident, no TFN, ATO defined, and of course the voluntary agreement, which is great if you have contractors as well as employees. The cessation type, of course, that when somebody leaves, it is also going to need a reason, and that was on one of the previous slides. So you'll be able to put in there that they left, because of illness. The income types, again, and you'll see that it is a little bit wider, so that the ATO is getting a little bit more definite information rather than them guessing from what tax we've taken out. So this is, again, we're able to specify that closely held payees, which I think is great. Inbound to Australia, you know, labour hire, those different types. And again, in GovReports, and I am country codes, and again, this is something new that we haven't had to put in before, and it's going to be for people who are inbound, so on that working holiday, or for Australian residents that are working overseas. And that, again, that definition is going through to the ATO. The ATO don't have to wait until the end of the year, until someone does their income tax return to get that information. They can know it earlier. This is where the disaggregation of gross, so where previously we've put bonuses and commissions and directors' fees and paid leave and salary sacrifice and overtime and some of the allowances all into gross payments. This is where we're going to pull that apart and put them into different areas. And this next slide, what I did was, this is from GovReports' own workings, and this is what it is in version 1, and then this is the addition in version 2, and you'll see that there are greater breakups that will be in there. So, for example, the child support is more about Services Australia, so perhaps, you know, our clients won't be getting requests from Services Australia as much, because they will have that information coming via STP. Again, this is just to show you with the current versus the new version with the ordinary earnings, that wages and salary breakup. And again, you'll see that it expands quite a bit, that the bonuses and overtime and directors' fees are all going to be separate. So we're going to be able to break that out of our payroll so that the ATO get all that information. Here again with allowances, and I know that I spent a lot of time when STP first came, where I'm going, oh, here's an allowance, where does it go? And I was a little bit concerned, you know, that things got put into, a lot of things got put into other, or, you know, they got put into gross. So there is that breakup, and this, you'll see there is a lot more breakup. And of course, the advantage here in GovReports is that it's got the tick there for PAYG and for super, so that the system can work out what is appropriate for that. You know, is PAYG needed to be on this allowance? Salary sacrifice changes to the law from the 1st of January 2020, where salary sacrifice was coming off the gross wages and was, you know, lowering people's wage. That's not happening anymore. That needs to be, it's no longer used to reduce ordinary times earnings or count towards your minimum superannuation guarantee. So that was another thing, that if somebody paid $20,000 a year in their own salary sacrifice, it actually meant that employers didn't probably, I don't know, but probably, you know, had a lesser actually SG component. So that has been changed, and of course the forms are going to reflect that. Then we've got lump sums, and again we have a new lump sum W, which is about people returning to work, and this is return to work payments. So again, this might not be used very often, but if it is, it now has its own little category to be put in. And you'll also notice with lump sum E that they have left the facility to put a what financial year are you being paid for this lump sum E, so that you can put the financial year, because again that can, you know, affect the tax rate. And of course, I'm sure, you know, a lot of you are income tax agents, and you know this better than I do. So again, GovReports and I am is taking account of all of these things. As I mentioned, if you're changing software, changing the business management software IDs, also making them, I think, more obvious if you've got new clients that you need to set up, it's going to be much easier for you to let the ATO know about these. And so again, this is where on the screen that you will be able to see them as you are working normally. As I mentioned, the child support garnishes and the deductions is going to have a bigger area that if you need, and again, hopefully it will reduce the back and forwards between you and Services Australia. So that's going to be obvious on there on the software. And wow, I can't even really believe it. And what I think is wonderful, and I think Tiana and the guys have done a brilliant job, is that the new version, and I will say likely to give them a bit of leeway in case they need it, but in GovReports it's going to be from early June. So that's where I see that if you've got 20 clients, 30 clients, what have you, that you need to upgrade, you can take your time and do a few, 1 a week or 2 a week or whatever it is you need to give you that chance, so that you don't have to do all of them in December, because who wants to work that hard in December? And then the IAM is going to be upgraded in August, because of course we will have done the STP reporting, the finalisation. That'll be finished, and then it gives them a chance to start. And of course, even though you may have a month's worth of wages, if you're doing weekly STP reporting, then that is going to naturally upgrade with the new software coming out. So I think that's great. I'm looking forward to doing it. So Tiana, what else would you like to tell everybody? Because I feel...
Hey, I think when you were mentioning the beginning of the version, STP version 2, for those that already have clients reporting STP for STP during the year, if you are switching over to STP 2, what that means is that each individual employees that you have on the client's file must be updated with the new details. That additional details that's required in STP2 for this reason. So if you have switched over to STP version 2, you can't go back, because the old versions won't have the data, and it won't erase the data. So just be careful. If you are ready to switch to STP version 2, then you will also need to update the employees' details, the additional details, and that can't be reversed and put back into the old versions.
So can I ask, I'm going to ask you a question, Tiana. When you don't see the new categories until you upgrade, is that right? Am I understanding that correctly?
That's correct. So with the GovReports, so when you select the form, it's got STP version 1 and version 2. So if new version, the old versions that you can select, or you can select the new versions. And before you switch over to new version, it will ask, are you sure you want to do that? Because you can't go back, as you showed to us earlier.
Right. No, but what I was thinking of is, so I would maybe suggest that people pick maybe their easiest client to do that, get all their information that they feel is they need, and then just do the one. And once they've had that experience of the one, then they can see, how long it's going to take.
Absolutely. Absolutely, because it will work one by one. It works on, you can, so maybe you have 20 clients and only 2 clients that are easy to deal with, and you maybe want to start with these 2 clients in the new versions for these 2 clients. That's fine, perfectly fine.
And also too, if it's in there in June, it doesn't really matter if you wait until you've done that STP finalisation and you start the new ones. You start the new version in August.
That's right.
Cool. And I will also mention, I'll go to the next slide just to mention to everybody that in the GovReports Help Centre there will be, it's not there yet, so don't everybody click on it, because it's almost there, the Single Touch Payroll Help Guide. So that will be available there, just not yet. So yeah, because I don't want you to get everybody to ring you tomorrow, Tiana, asking where it is.
Yep. I think on the second topic that you mentioned, the tax file number declarations, to this date, you don't have to send it to the ATO, the signed form. As long as you've got the one versions that you have from the employee to keep on file. But in the GovReports and also in the IAM, you can fill out the onboarding details. So get the form complete by the employee, and then enter those details onto your the onboarding details of the new employee informations. And when you do the first pay run, it will also lodge those details to the ATO at the same time. So yep, no longer do you need to send the signed TIF and DEC to the ATO. But if you want to do it,
that's on the STP1. So on STP2 there is a slight changes, which the onboarding process has been replaced by the personal details. So on STP phase 2, on each pay run, the employee's commencement date needs to be included with their tax treatment code. That's more sufficient for the ATO to consider under what period the employee started and under what category the employee is in. That's on the STP2.
And so, Sandy, if I'm going to another question. For example, I just lodged a tax file declaration for a client yesterday. So that information I'm going to have to, when I upgrade the STP report to phase 2, I'm going to have to make sure that information is on the employee.
That's right, yeah.
Yeah, cool.
That question, Sandy, maybe you also need to clarify if on STP version 2 and I'm filling out those additional details of the new employee, if I don't complete all the questions, it will come back as an error, right?
So that's based on the validations. So all the mandatory field has to be completed before submitting to the ATO. So the validation applies, and so the invalid, incomplete form cannot be submitted to the ATO from GovReports or from either from IAM.
Right, so so you're going to know that you don't have all the information before because you can't lodge.
Yeah.
Yeah, cool.
Okay, so we do have a few questions, and the first questions from Kathleen. She missed the beginning of the session, so wanting to clarify that closely held includes sole trader or not.
Now, I'm not a tax agent, I'm a VAS agent, so my understanding is that it is not a sole trader because a sole trader, can't do it, but I'm willing to have a tax agent tell me I'm wrong. My understanding is that you have to have an entity, and so that's what you're closely held to. Tiana, would you, or Sandeep, would you like to?
As far as I know, it should be an individual directly related to the entity. I can't say that it's a sole trader.
Yes, because your income's slightly different with a sole trader, whereas when you've got an entity, you can have wages, and a sole trader can't take wages as such.
Okay.
Please ask a tax agent.
I'll just check with the ATO and get back to on that question. I'll just clarify on that. Yeah.
So Kathleen, we'll come back to you on that. Not too sure how we come back to her.
So Kathleen mentioned she reports
the details. Yep. So we get your details, Kath, and then we'll come back to you on that questions. Okay, the next question we have from Mark. If you are using the SDP fuel concessions for closely held employees, are we just putting in total gross and tax like now, and then we produce the PAYG summary, or have the options to do this?
Well, you don't have a PAYG summary, so whatever you put in, you can end up on an income statement through IM. Yes, Sandeep?
Sorry, Deb. I'll just.
If you put a person through Single Touch Payroll through the IM, then you can come out with an income statement at the end of it.
That's right. Yeah.
Yeah.
And the PO general summary is not required. So once an employee has been submitting through the STP, so they can get all the income statement at the end, and also the payment summary is available. The report is available on IAM.
Yeah, because payment summaries, you're not putting payment summaries through anymore once you use Single Touch Payroll.
Okay, we also have another question for Mark, and if they are closely held, then June quarter is now not due on the 14th of July, but when their tax return is due.
And that's only if the only people in the company are closely held. So if you've got a company where you've only got the closely held people that are going to be earning income from it and no other employees, then yes, you have that extension to when they're doing their tax return. That's my understanding.
Yep, agree. Okay, and the next question is from Sylvia. If a company with only closely held employees now needs to report STP for the first time, what is your software offering? Sylvia, if you are a BAS or a tax agent, you have the options to select the package, the GovReports package, and that's STP is included in these packages. So in these packages, you can report not only the STP but also activity statements, and tax file, TPA, etc. It depends on your usage. The prices for BAS agents start from how much is the BAS agents? I forgot.
They get the 30% discount on the IAM.
No, so with GovReports, I think for the BAS agents, it's $29 per month or something. Just check on the website. I'm sorry, it's Thursday night. But for tax agents, the price starts from $348. That's on demand, and then for lodgement, you pay for that. But that's like I said. But if you are having a lot of clients, you probably be better off with the Savvy packages, and that start from $79, and that gives you unlimited lodgement of all the STP activity statements and other usage of the software. But if you only got a few clients that wanting to report the STP for these closely held, you'll probably be better off with the IAM and purchase that from as a tax agent, so you get the 30% margin. That comes up to about $69 a year per client.
And I think that's a great one. It's $99, isn't it, for clients?
Yeah, for clients, if they purchase that, it will be $99. But if the agents purchase on the client's behalf, it's at wholesale rate, which is $69.
And even the bigger one, the IAM, which lets the client do all of the
full account,
tax.
yeah, the full ledger, then it's $149. And again, you can get it if you get it on your client's behalf, it will be at the 30% margin.
So it's about $100, approximately.
Roughly $100. Yep. Okay, so we seems to have any other questions? If you have more questions or want to know more about what Deb has mentioned today in this webinar, please don't hesitate to reach out to us either by email or telephone, or however means it is easier for you. Kathleen, we will get back to you on that questions. We're just waiting to see anyone else have any questions.
And maybe, Tiana, maybe round about August or somewhere, end of August, we may do, or another one might get done on once it's all up and running.
Yes, agree. Kathleen, the recording of this webinar will be on our website. If you go to govreports.com.au/webinar, or just go onto our website, scroll down all the way to the bottom, and you see the webinar. You click on that, you'll be able to find an upcoming webinar and past webinar, because this webinar will be posted on the past webinar, so you find the recording there, and all other recordings of all the previous webinars as well. Cool.
All right, wonderful.
Well, that's all, folks. Thank you, Deb, and everyone.
Well, thank you.
And enjoy the rest of the day. And bye for now.
Don't forget to turn off the recording, Tiana.
Yes, I will. Thank you.
All right, bye.
Bye.